There we go. How is everyone? Great to see all of you. Dougie, as usual, is in. Doug, you always remind me of a guy sitting in your power chair. It's like that couch, and you probably control the entire universe right from that couch. Good to see you. Good to see Nimai's in the house. Rob's in the house. Yevis is in the house. Man, we're picking up some key talent here in this group. Hey, let's not waste time. Let's get started because we have a lot of stuff to get through, and we are going to do it in usual Jennifer Hunt speed. Lots of stuff. So I hope you brought a pen and paper. But my name is Niran Kulathungam, and I'm here with Jennifer Hunt. I'm the Chief Leadership Officer for Real Estate Wealth Lab. So if this is your first time joining us, welcome, and great to have you. A couple of things to talk about before we get moving. One, there's a legal disclaimer. If you can just take a picture of it, snapshot it, what it means is that we provide forward-looking information, but what we're doing is we're looking at the market as investors ourselves into what is happening right now. And here's how we're interpreting the data. It's what we're doing. We are not, you need to have your own qualified advisory service before you make the right decision. So just take a snapshot of it and you'll know what's going on. While we're gathered together today, I need you to do a couple things for me. One, don't solicit and don't sell, but I do want you to ask questions. I do want you to say hi. I do want you to engage. And you know, the day is coming when we will be able to get together in person, and we'll have some events coming up. But right now on Zoom, throw in the chat, be respectful, but share feedback and your thoughts and ideas, because we really depend on what you say to help us formulate and articulate what comes next for us. Couple of housekeeping things. This event is being recorded, so if you are here, you will have access to the recording, and I believe we may even be live streaming it on certain platforms at certain times. The agenda for today, this is what I'm excited about. You know, I'm just right now putting together a deal with 3 different buildings. And when I'm talking to my friends and comrades and people that are investing with me, there's a question that constantly keeps coming up. Is the market overheated? What's going to happen to the market? How does interest rates affect what's going on? How does inflation affect everything? And there seems to be, I don't know about you, but there seems to be very conflicting ideas out there. And if you listen to the news, if you're like me, you're going to find yourself being pulled in all different directions. Our job here is to share with you what we believe to be clarity of thinking and clarity of mind. And so we're really excited. Jennifer, I know, is excited about bringing you next level intelligence on Canada and the US so that you can make your decisions better. And guess what? After that, because you asked, and we are delivering, we will introduce you to global investing. So we're going to start today on talking about what does it look like and feel like to invest globally. Okay? Our team, we have, you know me, you know Jennifer, but we have a huge executive team. And behind each of these people, there are teams behind each of them. And that is one of the things that I am really excited about, because it shows our strength and versatility. Richard Dolan, who is not with us right now, I believe he's in Miami. He's our Chief Growth Officer. Ken is our Chief Operations Officer. He is able to operate and create process for anything and everything. Vincent Sundar is on the call here. Vincent, give us a wave. He is our Chief Technology Officer. And Yan, I'm going to attempt your last name, Kacharowski. I hope I got it right. But Yan and I are good friends. And you know what? He is the whiz at marketing. This guy can sell snow to Eskimos. So if you need to know how to scale your business up and get your stuff in front of other people, Yan's your man. Rob is there. And Rob Ayaketa is our Chief Real Estate Strategist. He also builds pools on the side, ladies and gentlemen. So he's your man. And Paige, of course, most of you will know because she is the head of our customer experience. So if there's anything that you need, reach out to us. You can even follow us on Instagram. And if we can put the Instagram handles up there. There we go. So if you want to take a picture of that, because that's where we will put out information that is near and dear to our hearts in hopes that it will help you. Now, have a listen to this. Sorry, I muted myself. I'm back, boys and girls. That trailer is what is happening in the future, in the near future. You know when you go to see a movie, before the movie, there's a trailer of upcoming stuff that you don't want to miss. That's what that is. It is hinting at that. Invite your friends for a limited 30-day trial. And by the way, lean in, everybody. This is a secret. Don't tell anybody else. That when the new things that trailer talks about comes out very soon, that 30-day trial ends. So this is your time. If you want to help us or help your friends or help yourself, push that out and let people know. Now, new events that are coming up, if you are welcome to take a picture of this, a snapshot of this. These are our next events, May 11th, May 18th, and May 25th, and then June 8th, 15th, and the 22nd. If you need to reach us, you can reach us at info@realestatewealthlab.com, and of course, our super duper website. So I want to bring on right now Jennifer Hunt, and most of you will know Jennifer. She has multiple properties under her belt. She has been in real estate investing for a very long time, and she is a whiz at everything from vacation rentals to multifamily. And I'll tell you what, one of the reasons why I like hanging out with Jennifer, she helps me see clearly what is going on in the world. That allows me to make good decisions on investing. So Jennifer, are you in the house? Are you in the
I am in the house. Thank you so much, Niran.
You're welcome.
What a great introduction. I really appreciate it. And I'm so grateful for you, Niran, as well, for all that you do in the world of leadership and coaching and advisory services in real estate as well. And just a good person to hang out with, as are so many amazing people. I'm so excited to see so many of you. Nima, I feel like it's been ages since I've seen your beautiful smiling face. Hello. And Anita, you're back obviously from Florida. Oleg, it was great to see you smiling there. Maureen, Terry, Hugh, Brian, Elias, and I'd like to just do a special, and Zoria, of course, and all of you, it's amazing. And a little special shout out to my dad, who's also joining in from Victoria. Thanks, Dad. It's always great to have family support for our endeavors. And also just a huge, oh, and Catherine, right, you're in Mexico still, so that's cool. Suzanne, one of our brand new members, so thank you. And Donna, another brand new member. This community is growing and we're so delighted to have you here, so thank you. So without further ado, I have got quite a bit to share with you, as always, as I always do, so nothing new there, but we're gonna get right into our research lab. And then as Niran mentioned, we're gonna be talking about global investing. So now the real estate cycle is simply the business cycle of real estate. It goes through expansionary periods and it goes through contraction periods and stabilization periods. What we do differently at the Real Estate Wealth Lab is that we're able to actually more accurately forecast the duration of each of those real periods in the real estate cycle. So this is what it looks like though, because we're able to see if it's contracting and for how long. Is it a short period? So for example, in Vancouver in 2018, they went through and I was able to accurately forecast a 6-month contraction. 6 months, that was it. but there was a little buying window there for those of you who are listening. And now we've been able, with the launch of the real estate cycle formula, to bring in even more accuracy, taking in the ups and the downs and the weighted indicators of all of these and how they contribute to that duration of a particular forecast of a particular real estate cycle, right down into very specific markets. Now, I just want to take a moment to acknowledge that typically what we do at our research labs is that we have the macroeconomics for US and Canada and how they impact real estate. And then we also do a market analysis. But I hope it's okay with you that we do a special report. So it's a REWL special report on global investing. And that's because so many of you have been asking, how do you do it? Why would you do it? And we're going to get you started with that today. And the market analysis, for those of you who haven't seen it and you haven't seen it yet, I should have actually popped it in here, is that we just created our very first infographic, Calgary market analysis. So maybe someone could get a link to that or get hold of it or whatever. I know it is in your member portal. It's a very cool infographic, and it tells you all of the not all the indicators, but a good snapshot of the important indicators that you would need in order to get a joint venture partner or to showcase some other real estate investor or a client if you're a realtor for that Calgary market. And this is our first. We will be doing many, 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 many more in the future. So you'll be able to have a very tangible tool for your various markets in our analysis. All right, so let's see. Why are we questioning the media and what we see in the media? And that's a lot of what I do for the Real Estate Wealth Lab and for you is I take news and studies and reports, including a 540-page report this go around for just one population metric. Well, okay, I used a couple, but yes. So I go through all of these things so that you don't have to. And then when it comes to news, I do have my master's degree in news. In fact, in how sensational news is and how it impacts democracy. Now, why does that matter to you? Is because it means I have a bit of a bullshit detector factor when it comes to news. I know how it's created. I know what they're trying to get, and that's great. I love lots of journalists and reporters. That's how I can help them too, is get them the right stories. At the same time, I'm also really, really passionate about truth. I'm passionate about research. And these were the comments from my professor actually on my thesis saying that please continue to perform research because you're really, really good at it. And I don't say that from an ego place. I say that because I love it. I'm passionate about it. And thank you to you and all of you here today and in the REWL community. I get to continue to live out my passion and deliver to you. So from the bottom of my heart, thank you. Okay, so in case you want to get into this just a little bit more, why we question and what we see in the media. Fake news everywhere. And then I just wanted to plant this seed is that critical thinking does not hurt. It might take some time and might require some opening. Oh, hey, Tammy. Yep. Thank you. It doesn't necessarily have to hurt. But the cool thing is if it does hurt your brain and putting all these things together, I'm here for you. So use me, leverage me. This is what I want to do for you. And so that you don't have to look like that guy. I think he's a famous actor, but at any rate. So I'm going to go through a little bit of the political climate of what we're seeing right now before I get into GDP. Now, I know that we look at US and Canada. This political climate is a little bit more focused on Canada. Because we just had the launch, the announcement recently, just had the announcement of the 2022 federal budget. So that's where we're going to start. So the Globe and Mail, from tax breaks to home buyer incentives, how the 2022 federal budget affects Canadians' wallets. So this one's a little bit more of an overview of the whole budget, if you will, but a couple of points from a rental housing provider perspective or a real estate investor. $10 billion earmarked for making housing more affordable, $5.5 billion to 106,000 new homes. 6,000 of those are affordable housing, and the rest of them are housing affordability. The difference, one is for more social housing, and the other is to help make housing more affordable. Generally, $5.3 billion to dental care for lower income individuals. And get this, an independent body to address consumer complaints against banks. Now, I just got to say, wait, excuse me, because I just feel that that's very interesting timing, considering that bank accounts in many cases were just frozen during the whole trucker convoy situation. So to me, this just seems very odd. I didn't know that banks had so many complaints. So it's just an interesting perspective and wanted to raise that to our attention. So this $5.5 billion to build 106,000 new homes in 2 to 5 years, there were two different components of that, no need to break it down, which ends up being about, I don't know if I did the math right, but about 52,000 per house. So that's kind of interesting. Oh, Maureen, where are they getting the tradespeople to build these additional homes? Oh my gosh. So yes, I'd actually just read about that today. And it was something like, this is in the US though, the construction and tradespeople, but it was specifically construction, is understaffed by something like 28% in terms of need. So like that's in terms of labor shortage or the lack of individuals who are going into that. So that should be interesting. But I wanted to remind everybody about a study, and we've talked about it lots here, that the Scotiabank did with regard to Canada's delta, our gap. And when we compare Canada and our actual number of dwellings per 1,000 people, we're actually pretty low by comparison to the rest of the G7 countries. And what that means is that we actually have way more building to do than most other countries. So our gap is even bigger. So 106,000 houses. Well, let me ask you, do you think it makes a dent? I don't think so. And we've got lots of studies in other events where we've gone through the actual numbers. So I just wanted to raise that to your attention. Now, Landlord BC, I understand that they're British Columbia, but they did a really good overview of the federal budget as it pertains to rental housing providers. Now, all of these are in your REWL News Intelligence newsletter, so that you get every Wednesday, and I think it's all of these articles, I would say, are in that. So in case you miss something or whatever have you, you have access to go back and get a different perspective on it, or at least read or share the articles as you like. So I'm gonna go here. So this is what I love. Okay, so the rental housing providers, these are the highlights as they pertain to us and landlords, if you will. So the government admitted wow, this is so cool, that the main cause of lack of affordability is, drumroll please, the lack of supply. Now, I know I'm sounding a little facetious and you're going to get a lot of that today. My apologies, but holy cow, I'll show you something in just a minute. They also said that the government committed that municipalities need faster construction and approvals. So of course, now we get into the jurisdictional thing, and the federal government can't commit what municipalities can do because they can't really push them to do it, but they can certainly influence them to do it. So I'll show that in a moment. They've also committed to do a study, yes, more research, on the role of large corporate players and their impact on Canadian renters and homeowners. And they've committed more funding for housing. Okay, so all those are pretty cool things when it comes to our perspective. Now this is, these are my responses to each of these. So when it comes to the supply and recognizing it and admitting it, I'm just so delighted. This is something that since 2015 or 2016 maybe, even earlier, quite frankly, but since I was aware of it, one of my dear colleagues, Michael Ferreira from Urban Analytics, has actually been saying #it's about supply stupid when it comes to housing supply. So this has been around 2015, let's say, to 2022. So at least 7 years that it's taken for the federal government to finally actually also acknowledge that housing supply is the main crunch factor. And I thought that this little number here is quite astute in terms of this cartoon. So it appears there's a housing shortage. How can we reduce housing costs in this city? Let's say how high housing costs are good. Let's put in price controls. Why don't we just build more? And then he's kicked out. So as you can see, this is such a crazy, wild idea. Sometimes common sense is the best way to go. So this is exciting, but we shall see. And for the study, this is very interesting. So what I am curious to know is when they do this study of the role of corporate players, what we do know based on 2016, a study from 2016. So again, that was six years ago, that, and this is super conservative. It's actually way higher than 70%, but I'm trying to just like not be all sensationalist. But so approximately 70% of rental housing is brought to you by mom and pops, essentially. Small businesses, small mom and pop kind of people, you know, just people like you and me. Some of you are way bigger out there in the world, but in other words, not huge REITs, not huge institutional investors. They're not the primary, well, they're like 30, maybe 30% of rental housing property. So to do a study on them will be very interesting. And I hope what they find, ladies and gentlemen, is I hope that they find that it's the regular old, relatively small time-ish, not, you know, like within reason, mom and pops who are the primary rental housing providers. And as a result, what about helping those folks out? What about helping these small to medium businesses, enterprises, SMEs, which is the majority of the rental population here, rental owners, is helping them out with affordability and different things. So I'm hoping, I'm just hopeful. There we are. We'll leave it at that. And thus, how are they going to get this municipalities to approve things? And I love this little, you can't permit a house to be built in that vacant lot. I don't own that lot, but I own the view and the birds will have no place to sing. These are kinds of a little joke, a meme about NIMBYism, not in my backyard. And the government in the federal 2022 budget is announcing that they are going to be providing incentives to municipalities to essentially help end NIMBYism by pushing through approvals, by pushing through things a little bit faster and more effectively. So Toronto Sun, the opinion. Okay, this is an opinion piece. This is not my opinion piece necessarily, but it is an opinion piece. The Liberal federal government broke the debt clock. They broke it. Are you guys familiar with the debt clock? I'll show it to you in just a second. So there's a Canadian debt clock, and I do have it here, so you get to see it. But by doubling the federal debt since the current, well, the federal government, the Liberal government came into power in 2015, it is now at 1 trillion, over $1 trillion in terms of debt. And that's actually too many digits for the federal debt clock. So literally they broke it. If you're not familiar with the debt clock, it's right here. The www.debtclock.ca, and this is done by the Canadian Taxpayers Federation and their debt clock. And have a look at this, ladies and gentlemen. This was taken yesterday afternoon in terms of the timestamp, and Canadian federal debt 1.1 trillion. Your share is it's 31,000, and that's more as of today. It ticks. So every single Canadian has $31,000 that they owe the government just for our debt. Now that may not sound like a lot, but it is. That includes everybody, from babies just born to adults, very senior adults. So one thing to consider as a tip, and this does not come from me, this comes from, well, it does come from me, but it also is something that's widely used from top government economists in some ways who are on the outside but trying to consult in. And one of their influences is to say to stop digging, literally to just stop digging the hole. That is one of the ways that we get through this, obviously. Yes, Catherine, it shows how much debt each person now pays. So you got it. Thank you. Yeah, so that's one way that we can fix this a little bit. So the government, and now we're going to get into government printing and circulating money means more debt, which means more inflation, which means more interest rates. So in other words, how we get to this number, this 1 trillion that they're still spending, and I'll talk more about that in a little bit, more spending, especially with every single new crisis that seems to come towards us. We are having these circumstances, which actually are very key for hold and buy signals for real estate. So real estate is one of the best assets to hold during these kinds of inflationary times because we're in debt, because they're printing more money, because they're circulating it. That means we have inflation and our GDP is okay, but it's not great. So with debt at record levels and climbing, these are buy and hold signals. All right. So that's the political climate with your federal budget update for Canada. And now moving into GDP for our economic health across the US and Canada. And we're starting with Canada. So Stats Canada, gross domestic product by industry, real GDP up 0.2% in January. That's the closest that they've had. And it's above pre-pandemic restrictions. This is a fantastic little, look at this, look at this. So billions of change, 2012 dollars, all industry. Now they just chose 2012, but they do is that allows them to basically look at monies equally without the influence of inflation on them, so that you can actually see, is it actually, yeah, comparative. And so we can see right here, look at that line. Okay, we were doing great, obviously plummeted, and we are literally above. I added that line, by the way, and it is straight. So at any rate, we are above those pre-pandemic government restriction shutdowns. This is very, very good news for sure from an economic recovery. And of course, the economic output is a leading indicator that forecasts, one of many indicators that forecasts our rents and where they're going to go and our property prices. So this is something to definitely watch out for. Here's the actual numbers, which in case you wanted to see it, February 2020 to, I won't even say it, the amount there. And then you can see that by November 2021, we'd already surpassed basically the beginning of that, like where we were at the height prior to the pandemic related government imposed shutdowns. So we're well on our way in terms of trajectory. That's always very good. And then what it means, because it's a leading indicator, we're expecting a long, slow, expansionary period in our real estate cycle. And by long, I mean something like about 10 years. So we are on the right side of up. We can see the possibilities with our economic recovery at this time. Why do I say at this time? You definitely want to be staying tuned. There are some measures and some pieces that are at play that will have an impact on how successful this economic recovery is. That said, nothing's falling off the cliff at the moment, so just hang on and stick with us. We got you. That was not a cliffhanger. I know I address it later, so don't worry, just stick with me. So the Epic Times, they came out with the US economy. Oh gosh, here we go. So the US economy is likely to dodge recession despite the Fed Reserve's the federal government tightening goal, and this is Goldman Sachs. So US GDP in 2022, Goldman Sachs is predicting it will be annualized up 3%. So that's pretty good. That's the second fastest pace in 17 years, following 2021's 5.7. But remember, that's called net GDP. 2020 was way down. So of course, when you have a percentage up, it's way up. So that's just net. So no big whoop. But now the US economy, similarly to Canada's, is like back on track pre-pandemic levels. So a 3% growth rate is actually quite high. It's pretty good. And in fact, you don't want GDP growth rates much higher than, well, at 5, it starts to be unstable. So that's just something to keep in mind. Okay, so they're also saying, Goldman Sachs is saying that 2022 home price gains are expected to be 8.7% compared to 2020's record gain of 19%. And at the Real Estate Wealth Lab, we wholeheartedly agree. That is still growth though. So the good news is that we agree we are going to see more modest, but still growth. And 8.7 versus 19%, that's still good. That is great. Is it not? It's still higher than inflation, about there, the actual inflation. So that's good. The bad news is that the impact of the measures to deflate inflation are coming. And these include some form of recession. And that typically lags about 1.5 to 2 years from the moment that those measures to deflate inflation start to take hold. So this is why I say, yes, both Canada and the US are on a great trajectory with their economic outputs. However, we will be seeing some form of a recession in the next few years, because of how all of these indicators work together. But because there's so many, there's dozens of indicators that we look at in the real estate cycle formula, that those other components have enough weight that they're still pushing and driving this slow, long-term, modest expansionary period ahead for real estate. So stick with us, stay tuned, because there's a lot to unpack. I think I already did this one. Is a recession coming in 2022 or 2023? Oh no, I didn't. This is another one. So inverted yield curves. Who here has heard of an inverted yield curve? Pop it in the chat. Yes, I hear so nods. Yes, Hugh, perfect, awesome. Okay, great. So there's a lot of analysis that actually goes behind calculating an inverted yield curve. But I'm gonna, and I've done lots of research on it in the past. I'm not going into it right now. A lot of economists rely on that as a measure to indicate a potential recession. So it is one of those indicators. And the last time that we had an inverted yield curve, it was in when did I go sailing in Greece? It was in 2018, and I remember doing an analysis from a hotel in Greece in an earthquake about inverted yield curves, because it was very important. Everyone, yes, Greece, and it was so important because people were thinking, oh my gosh, this is a recession is coming. A recession is coming. I'm like, you know what? In fact, it's not. It can be. So when you hear, why am I saying this? When you hear this in the news or on the headlines, oh my gosh, an inverted yield curve means recession. It doesn't necessarily. It is literally just one potential indicator that could suggest that. So others say wait, and maybe not. So there we are. What you need to know here, I love this, the no opinion with regard to the inverted yield curve is not creating a recession right away. They're saying that the businesses they've got excess demand, low inventories, they've got lots of pricing power. They've got all this cash on their corporate balance sheets from the last few years to some extent, some of them. And they've got financing and ability to expand. Now, these businesses are where, this is where the pedal meets the metal, and there's more room to run. So based on these individuals, now this is all subjective economists with Goldman Sachs and above, and I should say, and peers, that they said that their individual subjective recession probabilities are in 2022, 5%. So what does that indicate? The yield curve is not necessarily the only indicator. 2023, 10 to 15%. 2024, 30% probability of recession. And 2025, about 50% of a recession. Now, this is where it's going to be really important to stay with us and to watch this real estate cycle formula unfold, because there's measures that are occurring over here to dial down inflation, increase interest rates, and all these things, and they all have different lagging time frames that overlap and compress and all of these things. We've got to watch this very carefully, but there will be some form of a softening in the economy, and it's just natural economics, which we are going to get into in our inflation section coming up. So we've had a life jacket economy for the last 2 years. What do I mean by that? Government spending. They printed a whole lot of money, injected it into the economy at a time where we were not producing very much and our economic output was down. That means, and it creates inflation. Now, what happens is that there's a place where it's going to deflate because we need to deflate inflation. So interest rates are going up, and an outcome of that is, so there's basically two ways to deflate inflation, and that is through interest rates going up and jobs going down. So naturally, this economy that's so buoyed is going to go down. But I want to make sure at this point, and I'm going to keep you in the loop for all of it, is it's not likely to burst, but we will see a little bit of some deflation. So what do? Inflation plus crises. Now, I want to get this off my chest. So crises is the plural of crisis. So it is not a spelling error. It is intentional. So I just wanted to get that out there because there are multiple crises out everywhere. There's a crisis here, a crisis there, crisis everywhere. So because we have multiple of them on different fronts, when you have inflation and crises, you have two things that are really important for you. And I will have this come up a couple more times. What you need to know is inflation is here for a lot longer than most are letting on. It is a buy hold signal, as real estate is one of the most stable assets during turbulent times. And it's also one of the best performers in inflationary times. And typically it outpaces inflation, even if it's just a little bit, but it sometimes goes pretty big. And we're in both. Would you not agree? Are we in turbulent and inflationary times? Ultimately, those are double buy signals. Now, we've got to come back to this because there's more about inflation. But here's where we are when we plot the GDP for Canada and the US on the real estate cycle formula. They're both, trending upwards with, an eye and an ear and listening for a potential softening again in the next little while. So jobs. Job is another leading indicator that helps us more accurately forecast rents and real estate prices. So we want to be keeping tabs on this. So the Financial Times, starting with the US first this time, the Financial Times says the US economy gained 431,000 jobs in March as the tight labor market persists. So this is good. Employment is up. Unemployment is down, and unemployment has actually gone down to the lowest level since before the pandemic. The government imposed restrictions in response to the pandemic. So as a result, this is moving in a good direction. It's a hold, it's buy signals. We don't need to dive into that too much. Ladders, this was really interesting. It's a company that I think they do recruiting or something, but they put this whole thing together, a study, if you will, and they do recruiting for, I think, jobs that are over 100K, primarily in the US. And so these cities have the most high-paying jobs, and remote work beats them all. Now, there's a little teaser in here for us as real estate investors that we need to be way more strategic when this kind of information shows up, and I'll tell you how. So remote workers, I'll just move on. So cities here, in order of the most professional jobs available, look at remote working is number one for professional jobs. Professional jobs are helpful for us depending on, who our tenant profile is, but they generally will rent nice apartments. They contribute to increasing the value of properties in a particular area. So we want to be paying attention to them. Number two, San Francisco, New York. You can read down the list all the way down to Austin, Texas. So all of these locations may be something that you would want to consider doing some more diligence on, maybe buy and hold, but we're going to unpack remote working in just a second, because this is the cities with the fastest growing number of professional jobs. So this was with the most professional jobs. This is the fastest growing. Take a look at this list. So remote workers up 453%. Then we've got Rochester, St. John, New Brunswick, Quebec, Calgary, Washington, etc. But we're going to unpack remote a little bit, because what it means is that remote jobs is winning. They're the most and the fastest growing markets. So when we come and think about it strategically as real estate investors, we have to look at it differently. We always want to go where people are moving, where the jobs are and where people are. But now we've got this disconnect. The jobs and the people, that it's not the same, because previously one might have considered, okay, well, you've got GDP and jobs, so the people move there. That is not the case anymore. And that's why we at the Real Estate Wealth Lab are completely different, because we look at these individual indicators completely independently and then reverse engineer it to see what's actually going to happen based on their weighted impact. So in other words, in English, we're looking at populations first, because look at this number of remote workers increasing. 400, this is just the professional jobs, 403% or 453%, which is an incredible number of increasing. And that means that there's people who have a job, they're remote. I've got this job, and they just go somewhere else. So what do you think that does to your economy? We can't look at cities the same way as before, because that economic activity goes with the individual, not the job site, not the location. So I hope that that lands for you. This is really important. And we want you to do, so when you're considering exactly where you're going to invest, it's like, well, where would a remote worker, if this is my demographic, where would they go? A lot of them are moving to the Sun Belt. Where do they want to, like, we have to get into the psychology. Where do they want to live? And maybe some of them want to be global. And we'll be talking about global investing just a little later on. So when we complete our homework and our diligence, we want to be looking at all of these kinds of leading indicators, and combined with other indicators, these could be buy signals. But what it means for sure is that it's not the same as it used to be. You don't go just run into Rochester necessarily, because those that might not just be, I'm not saying that Rochester is bad, just we want to be looking at it differently. So when it comes to Canada, Stats Can, they basically said that this is their monthly update, their economic dashboard. GDP is continuing to expand. And this is, again, that third month, we saw it earlier, the third month above pre-pandemic levels. Employment is strengthening. And similarly to the US, unemployment has fallen to a record low. But for those of you who were hanging out with us at REWL back in January, actually, yeah, it was January. We already knew this, but at any rate, we debunked a few little theories out there, didn't we? Had a good time doing it too. So Canada employment 2022 in March was 4%. And I just want to let you know, so, oh yeah, I've got that here. Yeah, you can see it. Right, so March 2022, employment is now at 4%. Did you know that a benchmark, some people consider a benchmark employment rate 6%. That means that 4% is above benchmark, it's better than. So that's interesting. Just something to keep in mind. So in other words, the employment situation in Canada is in good stead. So now again, we're plotting our jobs, Canada and the US, on our real estate cycle formula, and they're headed up in the right direction. Again, those impact our rental markets and our property markets upwards of 7 years down the road, even 10, which is what we were talking about most lately. People. So in Better Dwelling, Canada just saw the biggest Q4 of residents permanently leaving since the 1970s. This is wild. People don't leave Canada on the regs, and they certainly don't leave in December. Wow. So that's very unusual. 16,901 immigrants, meaning people leaving Canada, which is up 215% quarter over quarter. That's 56% you left at the end of November. That's right, Catherine. A lot of people, yeah, man. Some things happened at the end of November. So that's a very good point. Thanks for pointing that out. See, connecting the dots, there were some policies that were implemented November 30th, travel bans and whatnot, that a lot of people might have just said, hey, I'm out. So if Canadians leave in higher volumes for sustained periods, it warrants a deep dive. What does that actually mean? So if there is a trend here, if this is consistent and more Canadians are in fact leaving, because that's just one quarter, it's still high, 55%, it's still high, but we don't know, we don't have the data yet. So we do need to stay tuned. We do need to watch it. Don't worry, we gotcha. But this consequences of it could be, if it is a trend indeed, is that it could, well, it certainly already is reducing Canada's net population. I mean, 17,000 people left. So that net population is down. But more importantly, it could have a bigger impact if it's a trend. And then secondly, it may actually have, how do I put this? I don't know, like, have you ever been somewhere and somebody's like, oh, you know what, that's okay, but I'd rather, you know, it's like only so-so. Well, you don't want to be on that train. You want people to go where the fun is, and like this new restaurant is hip and cool and that bar's out. Well, you know what, that might be happening here. So if people are leaving Canada, that's a signal to immigrants to go and reevaluate, where they thought that they might be going to come and eat and hang out and live and play. And so it may reduce the desirability and the ability to attract immigrants. And they may turn to other countries instead of Canada. And I'm going to show you some data later that suggests that that's not necessarily that it's already happening, but it's certainly something to take stock of, given all the options out there. So a declining population is not usually a good sign for rental and property prices. You do need to stay tuned, but what this does signal is certainly not a run out and go and buy a whole bunch of properties. We need to understand, but this is just one indicator. That doesn't mean don't buy. This is one macro indicator, but it certainly doesn't imply that. So we got to put the whole package together. Okay. So Canada sees an all-time record for immigration. So on the flip side, see, this is why we put them all together. Because it might be a bunch of Canadians who are heading out of Dodge, but then there's a bunch of individuals who are coming in. Oh, but are they? Now, this is where, unfortunately, I've got some little bit more not so great news, because in Q4 2021, the government said, hey, it was an all-time record for immigration since 1946. Amazing, amazing. 405,000, 750,000 immigrants. Highest recorded ever. However, unfortunately, and I've already shared this with you folks, but in a different way, because this keeps coming up. This is just from March 30th. So this news keeps getting repeated and they don't get into the details. So you might be seeing it and you need to understand that this is a headline alert, because these particular stats, just going back here, these particular individuals, the majority of those 405, 750,000 immigrants were already in Canada. So it's a change of status primarily, not new immigration. Now that's okay, because by changing status and giving them permanent residency, it does positively impact our activity, our GDP, because people can actually go out and work. So immigrants can now work and make money, and that's good. But for real estate investors, it really doesn't make a huge immediate impact, because they were already here. They already had a place to live. So it makes little impact on rent demand and our rates and rental rates and real estate prices. So the Atlantic, why US population growth is collapsing. This was really interesting. Very interesting. So in 2010, stagnant. 2020, lowest population growth ever. 2021 grew slowest pace in history, only adding 393,000 people. So we're not seeing a lot of growth in the US either. And this particular individual who wrote this article, Derek Thompson, he says that a country that stops growing is a zero-sum country. If there's not enough immigrants, there could be misunderstanding, like in terms of why are they doing it? They, being the government, doing it on purpose in terms of not getting as many immigrants as they need. Could be a misunderstanding of basic economics. But in his opinion, America has steered itself into the demographic danger zone by not building and not growing as a nation. He goes through a whole slew and list of reasons why governments and countries need to be growing in order to have rights and freedoms and democracies and economic output and lifestyle, all of these things that you do want to have. So then I got into it. And I'm not going to go into all of this, because I can see this on here. I'll just go into this one, which is that is the World Migration Report from 2022. So this is a 540 page, I think, report that just came out from the UN, basically from their migrant department. And when we think about population, even notwithstanding all of that, the US and currently Canada as well, and I'll show you a stat a little bit later, the US attracts migrants. And so as long as the US is accepting people, it seems as though they will come. And this is positive for rents and properties. And so based on this data that just came out, the United States of America has been the main country of destination for international migrants since 1970. That trend is unlikely to reverse. Things can happen without question, but it's a trend that's well entrenched. I mean, since 1970, I'm not even going to say how long that is, because was born in the 70s, late 70s. So when we look at the people, we're kind of more at a little bit stagnant, a little bit flat. We don't know. The data has to come in for this year. We're watching it super, super closely. Now, interest rates. We promised that we would talk about interest rates. Bank of Canada, what you need to know, and how, is anyone else feeling a little nervous about interest rates? Just pop it in the chat. I see a couple. Yeah, Anita. Okay. All right, cool. Got it. Thank you. All right, so that's gonna happen. So here's what the Bank of Canada is got going on here. So the Bank of Canada increases policy interest rate by 50%. You guys are 50 basis points. It was April 13th, so in case you missed it. So the rate is now up to 1%. More to come. There will be more interest rate hikes. And now, just so you know and you're informed, you're going to start hearing it all over the place now. We've moved from quantitative easing and into quantitative tightening. So now here it comes as we deflate that inflation. So here's your interest rates. But a lot of the questions are how much and how long. And if you guys, I'm going to talk about this in a moment, but if you know Daft Punk, anybody know Daft Punk? Some of the songs. We're into pop culture. Yeah, Lewis. All right. So this is a 2009 song. You can start thinking about it. That completely applies to how much and how long that's happening here. So here's the charts for you. If you need them, we are definitely moving up quite a bit. And how much? So BMO, they estimate another rates to be 2.25%, and which is obviously up a lot from where we've been. And in 2023, a lot of folks are expecting it to hit 4%. But the good news is that it is still below most stress test levels. So that's something to consider as a possibly positive. But here's another narrative that's going on out there. How COVID variants affected mortgage rates in Canada. I mean, these are actual stories and actual headlines. And I just want to say, can we talk off the record as friends? Is that cool? Let me get into this one. No virus has impacted interest rates ever. So when they start getting into your head that the COVID variants have done this, this is just the type of sensationalism. It's getting us further away from critical thinking than we need to be. And so when we think about, okay, let's take that mirror and shine it where it needs to be. It's not on the virus, it's our elected lawmakers, otherwise known as politicians. They're lawmakers. Impact interest rates. Yeah, Ken, clickbait, exactly. But the thing with clickbait is it starts to train our brain to go, oh yeah, of course. Yeah, the virus impacted my mortgage rate. It didn't. I see a lot of you nodding your heads. So thank you. That really helps me know we're on the right track. So mortgage rates for the US, similarly, mortgage rates are up all over. And here we get into, again, still faster, higher. And this is where your mortgage rates are brought to you by Daft Punk. You know the song? Harder, better, faster, stronger. Okay, I can't sing it, but I was going to include it in here and then I thought, oh no, copyright, but this song. So what does that mean to us as real estate investors? So this applies to Canada and the US. It means buy, and it does be mindful about buying sooner rather than later to get ahead of the interest rates. That is not to say that you should go out on a buying spree and be less prudent than you need to be. Still be strategic, and don't worry, a great property, even with high interest rates, will work. It just will. And we'll figure it out together. We'll do co-ownership. We'll figure something out where it still makes sense. There's a lot of options in this room with this community. And I know that we'll be able to figure that out. So you can take a picture of this slide. I know it's really busy, and I mentioned it last time too, but I want to really get this in here, is when we have all these crises, this crisis, that crisis, this crisis, and the governments, multiple, Canada, US, etc., print money to throw at it, we get into debt. That debt equals inflation and interest. Inflation up and interest rates up. And this is happening, and it's rinsing and repeating. And as long as we continue in this cycle without, remember, I showed the picture of stop digging? We got to stop printing, stop getting debt. And that is one of the ways, that's really the only way other than, of course, increasing interest rate. But at some point, you have to stop printing and circulating the money. Just saying. More on that in just a moment. So this is what I wanted to say. Yes, I've got it. So interest rates are rising, inflation running up are in fact buy signals, and do get those mortgages sooner rather than later if you can, but no pressure. Absolutely no pressure. So in regards to inflation, one of my favorite topics. How's everyone doing? Is this good? Are you excited for some inflation TNT? Oh yeah, thank you, Q. I appreciate it. Because I've got some humdingers for you, Catherine. Ah, yes. Oh, Eric has a question. Eric, does that mean we should get a fixed rate mortgage? Oh shit, dude, I have a whole section on that, but I didn't include it. It depends. And I would, how can we do this? Maybe someone could help me, and I'll just do a little like live something at some point, because I've got the slides. And the short answer for that is not necessarily. And basically the statistics, if you actually work the math, it's something like an increase of rate of like, I should have kept it in, of about like 1% or whatever, the actual material impact on your property and on your actual mortgage is like $100 a month or something. It really is not when you start to impact it. And then when you look at variable rates versus fixed rates, typically variable rates have a far better opportunity over the long term, until of course at a certain point, but we're still really at historically low rates. The two caveats is that if a fixed rate really, really helps you sleep at night, and you know beyond a shadow of a doubt that you are going to keep that property for like forever, for the entire mortgage term, then maybe consider it. But there are very high penalties for fixed rate mortgages if you happen to, and I did that once. I screwed up. Well, I wanted to test it. It was really, really low anyway, fixed rate mortgage. I thought I was going to have this damn property for like forever. I just did. And then instead, someone came in and offered me a ton of money for my entire portfolio in this particular region. And that one happened to be kept in it because that was part of the portfolio. So as a result, I ended up having to break that penalty, and it was really, really high. And so not necessarily the best decision on my part, but why I'm telling you that story is because sometimes things change and you don't expect them to. That's why I do like to have variable. And if things start getting too crazy, we'll keep you apprised of that. All right. And yes, Tammy, historically variable always is lower, longer term. Concur. And there we are. Okay, so inflation. My favorite topic these days. All right, Bank of Canada. So again, with their monetary policy report, April 2022, all the factors of economic and employment and all these things that are going on, but holy crap. So this is what I looked up. I've got the report, obviously, but there's also this particular section. I went to their website to have this in brief. And at 2 seconds, has anyone ever played the game America Says or watched it? It's like a game show, like Family Feud. America Says? No? Okay. Thanks, Allison. I appreciate it. Okay. So listen, I don't like it, but it's a funny little game that people play, and it's on, syndicated television, whatever, like Family Feud. And in our marketing this week, some of our marketing team thought it would be cute to say, hey, are interest rates making you soil your pants? And I said, that doesn't really jive with my professionalism, maybe you could edit it. And they're like, you know what, but it's kind of catchy. And I'm like, you know what, the minute I started seeing that and going through all this inflation stuff, I said, you know what, inflation and interest rate, you know what, this is soiled my pants. This is crazy. So what is not okay with this is I've circled it in red. And that is that the supply. Hi, Christian. All right. Thanks for that variable or fixed mortgage. Thanks. So the supply chain disruptions are adding to inflation. And that's at 2 seconds in on a 1-minute video from the Bank of Canada. supply chain disruptions, inflation. This is from our governor of the actual governor of the Bank of Canada. Right on. So this is supply. And so this is actually from the report itself. This is a table that's showing the impact of Russia's invasion on Ukraine on inflation. Everything listed in that channels section is supply and demand 101. That has nothing to do with inflation. And yet they're showing it, oh, it's impacting inflation. I'm just like, I'm absolutely flabbergasted. I'm absolutely shocked. I'm freaking me out, to be quite honest. And it should to us too, because this is our livelihoods and our tax dollars and all that in being, overseeing by these folks. So supply shocks are not inflation. I did a whole longer segment on it in January, but essentially it is a mistake to consider this. It is simply not true. And if it's not monetary, if it's not spending money during a recession, spending and printing money during basically lower economic times, it's not inflation. That's it. So lots of other individuals who are out there do see this. It is around. But then at 10 seconds, back to the Bank of Canada in brief report. All right, I made it to 10 seconds. I really did. I'm not even going to say what PMP is. I don't even remember, but I'll tell you that last one. Inflation is projected to stay well above our control range through this year and come back down to 2.5% next year. So this last little thing is and prayed up, which means, oh my goodness, we need help. So when we look and unpack the Bank of Canada's policies, yes. So I pooped my pants and I gotta tell you, best one yet. So why? Because what I'm so excited about is all of you here in this community, our Real Estate Wealth Lab, is that with just these two insights coming up next, but you already know them, you are actually more qualified to implement national monetary policy. Hurrah! So you are definitely in the upper echelon in this country and definitely outsmarting them. So monetary policy, yes, you're more qualified. Again, supply chain disruptions are not inflation. Printing and circulating money is inflation. The international crisis, yes, it could impact, it could exacerbate inflation, but the only reason it's not supply chain, it's because they're printing more money and getting into more debt. And remember that debt clock is broken. How convenient. So if you want to dive into more, please, please, please log into the member portal. Our January 2022 research lab, the inflation section and even the labor shortage section are very, very good and very thorough. And when you do that, and after having been here with us today, you will literally be able to change the world, and I'll show you how. So a little bit more from the Conference Board of Canada. So again, there's light out there. Others are seeing it. Why? Not the Conference Board of Canada itself, but because it surveyed a whole bunch of businesses. And in these businesses, thank goodness for common sense, these businesses are showing that they're having, well, unfortunately, decreasing economic optimism. So conditions might 71% conditions same or worsen. Okay, this is how you actually get out of an inflationary situation. So we do have to be mindful of that. And in 2022, annual inflation expectations, 67%, 5%. Certainly that is way higher than what the experts told us was going to disappear. And I will remind you of that in just a moment. And 17% of just normal businesses, that's you and me, Canadians, 8% inflation this year. So another one that we're very excited about, the New York Times, rapid inflation, lower inflation, like some economists out there are increasingly warning. So we need our voices heard that it may take at least a mild recession to bring inflation to heel. This is just how inflation works, full stop. It's not something that we want, it's just how it works. So at least we need to be getting these into our minds so that we can make informed decisions. And I'm going to remind you, in January 2022, the market consensus of financial institutions, all of their economists, their dominant position on inflation was that it would disappear by the end of 2022. Who here thinks that it's going to end by 2022? December, 6 months, disappear. This is why I'm so grateful that you're here, so that we can at least have a conversation that makes some sense and is built on some groundwork of I don't understand. I really don't. So what is their agenda? What's their bias? Why would really top rated, amazing economists say this? And then that I have not unpacked yet, truthfully, but I'm certainly thinking about it because it just doesn't make sense to such a degree that I'm concerned. And it's making me do this. And it should be making you do that too. That's okay. I'll lose my marbles so that you don't have to. I'll just get excited about it. So what you can do, I was thinking about this deeply. We have to have resolutions to this. So what you can do about it is apply. Look at this. So I checked it out. There is a profession called the central bank governor. This is actually a job, and these are the skills, and it's got the responsibilities. I got this from 123test.com professions, and I figured, gosh, could we do this? Could we do this? Absolutely. There's a ton of you on this call right now that would be absolutely qualified. And now, after today's call, for sure, you know how to determine monetary policy actions and manage inflation. So you're already ahead of the game. I think we could replace them. So I did take the test. Would I have a match? And I'm close, but not quite. I did come up with a match for an economist, but not for the governor. So potentially one of you will be that person, and that would be amazing to have. So in reality, if you're not going to apply and have your own job as a governor for the central banks, what you can do about it is invest. These are buy signals, and definitely hold signals. So these are very important times that we're going through. Turbulent and inflationary means traditionally is something that we buy. So very briefly, I'm just going to go through the rental market and the property market. And then we're going to be getting into global investing very shortly. So rentals.ca came out with April 2022 rent report. And actually, you'll have to watch for it. The Real Estate Wealth Lab is going to be featured in their annual report. And typically, it gets out in January. They couldn't do it. So they're actually making it for the rest of the year. So we're going to be featured in that very shortly as an expert on predicting and forecasting what is down the pipeline for rent. So I'll just move over to this slide, which is helpful in showing where things are. Rents are going up. This is completely on track, what we expected, and it's upwards in line with the leading indicators last year that were pushing it. So that's all on track. Rent prices hit record highs for major cities in the US. Very similarly, it's moving up. I wanted to show this. This is the cities with the cheapest rents in America right now. This is something to be curious about, because you see these types of things, or maybe you don't, but these kinds of headlines. It's like, well, how can I apply that as a real estate investor? Cheapest rents, what does that mean to me? And it could be a sign of doing more diligence, dump or avoid. And the reason why is that you got to look at it from all kinds of angles, is because return on investment matters in market analysis. So if you've got low rents, but you also have a really low property price, your return on investment and the affordability of that investment could actually be okay, especially if you have, the rents that match that property price, but you have a really, really good tenant base. And I see a couple of these, like a stream of a couple of these particular cities, like South Bend, Indiana is Notre Dame, the seat of Notre Dame University. So student rentals there could be really fantastic. Or based on other factors, you need to avoid them. So in other words, when you see cheapest rent, you can think opportunity, but you got to do diligence, or go next and go where rents are higher. So what all of this means from rent data is that the current rent data is a hold signal. We're expecting, of course, rents are lagging indicators, and we're expecting that they will continue to rise for at least a couple of years. So, and always look at the specific data for your market. Now with property markets, Canada's red hot housing markets hint at cool down as higher rates and inflation bite. Okay, these headlines, man. Okay, cool down, fall off a cliff. No, It doesn't equal. So we will be seeing these kinds of headlines, and we don't need to freak out. So this is a table of some of the Canadian house home price gains by province. So if you think in BC, like on average, 24% last year. Kelowna was 23%. It was just under that, actually. It's interesting. Abbotsford was like way up there in like the 30 some odd plus %, for example. And so those are not sustainable. And it's okay if they soften. So when it says cool down or all these things, relax. It's okay. We'll tell you when it's really going to get wild if it does. So those are all hold and buy signals, buy, hold signals, you name it. In Western Investor Opinion, this was freaking awesome. I happen to know the, well, I don't know him really well, but I do know him. I've been working with him since about 2014, and he's fantastic. And this thing totally took me off guard. I didn't realize that this was his opinion. So kudos to you, Frank. Spare us the stupid ideas to fix the housing problem. So no cooling off period, teeny tiny houses, punitive taxes, 500,000 suites for the homeless won't create more affordable housing in British Columbia. So after 5 years, and all 3 levels of government trying to fix affordable housing, Canadian homes cost more than ever, and rents are high, record highs, and rental vacancies are at record lows. So these stupid ideas that have been in place haven't worked. And what the article is saying is like, let's just try some more, very facetiously. So how do homes become more affordable? And we started this earlier in terms of, supply, fewer taxes and less red tape. So we need to get rid of rent controls, et cetera, and improve the way that we do things at that municipal level as well. So lots there to unpack. The frickin' article is a joy to read. So you've got that in your inbox today. If nothing else, it's a good laugh. Oh, but a smart laugh and punchy. Packs punch. When it comes to the U.S., very similar. First, what's happening in the housing market hits a level not seen since the last bubble. Things are going up, et cetera, et cetera. But first-time home buyers, limited supply, and the long story short is what we're seeing for the property markets in the U.S. and Canada is essentially a buy, hold signals. Just hang on in there. There may be, for the long term, there may be a potential softening in 2023 and 2024 based on immigration patterns. There may be a little softening a little bit further out based on inflation, deflation measures. So we'll have to just stay tuned for what that's going to look like. And Niran, I think you're going to come in here. I'm sorry, I took you off guard there. Let me spotlight you, my friend. Oh, you're spotlighted.
I've already been spotlighted. Wow, that was a lot of info and great information. So ladies and gentlemen, boys and girls, my job at this point is to give Jennifer just a 30-second breather and see how all of you are. I was thinking to myself as I listened to this that, Jennifer, you started off your whole talk today on a statement that kind of stuck with me. Oh. Critical thinking, yes. Critical thinking does not hurt. And in my mind, I went down a rabbit trail. Do you know when I find, in my experience, what I find is that people have angst in their life, for lack of a better word, I use the word angst. When they have angst in their life, it's because they subdue critical thinking for a statement that they believe that they should believe. And so between what they feel they should be holding to, a mantra, a statement, and their critical thinking, there's this space. And when people like you and I don't have the ability to explore that, encouragement to explore it, and to unpack it and research it, we then start getting a little antsy. And so I really want to encourage all of us to practice the art of bravery, to step in, to not wait for people to tell us what to do necessarily, but to actually start thinking. And this is a smart room, and you are in the right room to be able to make decisions for your future that is far better than most other people. So anyway, it was just sticking in my head, and
Yeah,
when I
I
think of,
appreciate that, Niran. Sorry to interrupt, but when you're talking about that in terms of critical thinking and not hurting, and being brave and critical thinking, and it's also cool to start your critical thinking at a level that's already been critically thought. Critical think that. So, in other words, by being here and in this room and having these conversations, you've already, okay, now you get to critical think on a steak and not just on the bones that the media is throwing you. So I just want to say that critical thinking, to your point, Niran, it doesn't hurt, but it can take time. And so hopefully at minimum, this research lab and our weekly newsletter helps you save time so you can already be thinking at a next level, critical thinking level.
that's right. That's right. You know what's interesting is that when you talk about the people leaving Canada, I know some of the people that left Canada in the last little while, and what struck me is not, and I have no, Jennifer, you're the research whiz in this group, not me, but my observation is that the people that leave Canada are really high quality individuals who have the capacity to impact process, have the capacity to impact thought and next level thinking and leadership. And those are the people that we seem to be losing at this time. And that concerns me.
You know, Niran, you speak exactly to what's inspired actually this global investing special that's coming up next, is because there are many, many smart, yes, Tammy, you're one of them for sure. Very intelligent, very interesting individuals, many of them who have are real estate investors, and they're looking to partly leave Canada or at least explore other options. So I just want to be really mindful as we go into this next section, and I'll provide some context for that later. But yeah, really smart people. So
perfect.
All right.
So
Niran, shall I hit the slide?
You can hit the slide. Go for it. Oh, before you do, I believe we're going to play a video again. And if you joined us a little late, you know, when you go to a movie theater, there are like trailers about what's coming next. That's what this is.
All right, good tee up.
Perfect. Thank you. So there's lots of good things that are coming down in the near future. At REWL, just as a reminder, if you are joining us for the first time or just as a refresher, remember, you are getting weekly reports. You are getting expert commentary. We are seeing the macro market trends, and it's important to see the macro trends because it provides us with the environment in which to interpret our own niche and our own place. We have regular live digital events. We have city-specific market analysis, and we have masterminds. So excited to be here and part of this. By the way, these are, again, dates. If you joined us a little later than when we started, so just take a picture of these dates or a screenshot. And we also have something called the REWL Ambassador Program. If you are like me and you are excited about being part of us and us being part of you to journey together, you are more than welcome to invite your friends, your enemies, and people that you just want to bring alongside of you in real estate. Invite them to join our group, and we can actually send you a unique link for them to use so that when they do purchase REWL membership with us, you will automatically earn a 10% credit towards your own monthly REWL membership. Okay? So just send info at Real Estate Wealth Labs an email, and we'll get you the link. Remember, there's a 30-day free trial going on, and like I said at the beginning of our call today, this is a really limited time period. Once the new things that we are hinting at come out, that 30-day trial ends. And I think
that sounds like an act now kind of situation there, Niran. Take action. Right on.
That's right. Yeah, info at Real Estate Wealth Lab. That's where you can email us and we will get back to you. And I think, Jennifer, you are ready to get into introduce us to world investing.
Yeah, I am. This is definitely a REWL special, global investing. You have asked for it, so thank you for your feedback, and continue to do so because we listen, and I'm excited. There's a couple of things that we're going to be talking about, even more of your feedback later on. So, oh, and thank you. A page is just popping in there. If you want your referral link, your ambassador link, just email info@realestatewealthlab.com and share with your friends so that you can get your membership paid for. Makes sense? 10% discount, which is very cool. All right, so getting into global real estate investing, market selection. So before, how do I set this up? We were kind of talking about it a little bit earlier, is it really depends on what you're looking to accomplish. Some individuals, and many of you are on this call, are either out of Canada already or wanting to get out of Canada, as in move, as in relocate. That's one way. There's also global real estate investing and market selection from a totally different perspective, and that's just diversifying. So I'm going to unpack a little bit of both of those today. But first of all, I don't know how many of you actually saw this that came out. It's how to select a travel destination. I know it's a little bit off topic, but I thought it was really cute. This could be your way of how you do market selection. Hey? And you just go choose a number between 1 and 9. You multiply it by 3. You add 3. You multiply it by 3 again. You add the 2-digit number. You get together. Your number is where you get to travel to or invest in. That is one way that you could actually do this. We have smarter ways for you to do it. Don't worry, we're going to get into it. And I remember filling this out and going, okay, well, what was it? And I'm just going to let you know that it is rigged. And if you check out number 9, this was at the very beginning of the restrictions for the pandemic. And number 9, stay at home, came up all the time. Nima, you did it? Yeah. A lot of people did it. It was really funny. It's not so funny. Yeah. So global real estate investing, your why. I'm not going to read all of that, but you get the idea. Whatever it is for you, this is your life and you want to do what you love. And I know Allison likes the Caribbean, for example. Oh, there you go. Yes, I read your mind. Exactly. And Anita, you're loving the Florida destinations too. And lots of you that I've spoken to over the years and recently of what you want to do. And so this is about creating your life by design on a whole bunch of different fronts. So I'm not going to be able to get through it all in 20 minutes. As you can imagine, global investing is a big topic. Yes? Okay, so I'm going to give an introduction. I'm going to set the stage, and then I'm going to offer a couple solutions at the end for us to continue the conversation. So I'm pretty excited about that. So no matter what the answer is, this is what we need to consider on global investing. So another reason why is, and I love, this is a direct quote, not from me, it's from Kim Iskian from American Consequences. It's actually back from October. Newsflash, offshore done right is perfectly legal. In fact, you'd be foolish not to keep some of your assets somewhere else. So if we're looking at this, or you're looking at global investing just from a pure business hat, it's smart. It's just about diversifying your assets, using offshore entities, or however it needs to work out. That's not always the case, but having something offshore is actually is a necessary instrument in any smart investor's toolbox. So there you go. Danielle, you are bringing up data the smart people of this world should be discussing. Hopes. Yeah, that's exactly it. Perfect. And moving where the sun shines. So this is where, from a smart perspective, it makes sense to have diversification in your portfolio. Other reasons why is that when you have assets, and just kind of like unpacking that list a little bit further and sort of So what? So assets in another country can have legal protection that you're not familiar with, or different kinds of legal protection, shield from unscrupulous associates or extortion attempts, basically offering a shield, ensure inheritance for descendants, provide security, reduce investment risk, and enhance property rights. It's just a couple. Diversification of all these kinds of things, whether you're looking at countries, geography. Think about geography, like, and kind of climate impacts. Like, some geographies just get hammered. I mean, hurricanes, cyclones, blizzards, Canada, and having different geographical areas. I mean, Calgary, how many more floods can you have? So having some locations that are in other, and hailstorms, oh my gosh. Again, these are things that you can actually take into consideration, so that you're looking at different politics, you're looking at different currencies. And again, all of these things just end up being hedges and flow together, so that you end up creating a fairly robust risk mitigator. And some diversification, yes, exactly, of where the sun shines and palm trees. Like, this is also very cool. And different laws. So whatever your reason, if it's mitigating risk or diversifying or lifestyle or different kinds of options that you want to go to different places, or you just want to have different types of availability. And Catherine, exactly, go where you are treated best. That is a, we'll talk about nomad capitalist a little bit later. Nomad capitalist is so he's got great information. And if you want to get in on his inner circle, it's upwards of like $500,000. So there's ways to get out of the country, people, and there's ways to relocate and or diversify your portfolio. But 500K, if that's for you, go for it. Or hang out with us, and we're going to share a lot of amazing resources for definitely a fraction of the cost, and work it together. So that's kind of cool. So thanks, Catherine, for reminding me of that. And if you're looking at return on investment, but you also may be considering collecting passports and properties. So properties and passports, and you can do the two together. And again, it just gives you options and flexibility, and to go where you're treated best. So when we do look at market selection for global investing, a lot of the same things come into play. Yeah, you want to look at expanding, for the most part. You want to expand, have expanding GDP and jobs and population. All those leading indicators are still material factors. In addition to that, which we also do in all of our regular stuff, is we look at political climate. We look at currency, we absolutely do, but you're going to be looking at it from a different perspective this time. So you want to have all of these metrics and indicators that we always look at, and go a little bit further and a little bit deeper, because there's other things that factor in. Is it personal for you? Is it lifestyle investing? Do you want to have passports and properties, or just properties? All of those kinds of questions. Why and where do you want to spend your time, if at all? You may not want to. You may just go, oh, it's smart to have offshore stuff, so I'll pop it in an account over there, have a little property, never go see it. That's fine too. So if you want to have, and Danielle, I'm glad that you're levying these questions, because there's a lot of them, and yes, I have checklists. So this is a good portion of them. It's a good start. So why and where do you want to spend your time? Do you want personal use out of it? If so, when do you want it, and how much do you want to use it? So for example, let's say you wanted a place in Florida or Hawaii, but you wanted to use it at Christmas, but that's when you can get the most amount of money from it. Is that the best place for you? And how long? Like, do you want to be away for 3 months or 6 months or 9 months a year, or grow into retirement and be away even longer? Then we get into more questions that you have to ask. And I've got those in the coming slides. And how much return on investment do you need? You may want the property has to be an ROI. Well, then cool. Then you might want to do it through, for example, we had CPI Capital on, and they've got some great real estate private equity properties that you could get great ROI on. You're still diversifying your assets in the US, for example, and in different geographical locations, but it's a totally different investment. So again, but if you're not looking for cash flow or return on investment, and you're looking for this lifestyle, all these factors have to come into play. And I know I'm spending a lot of time on it, but you can't go any further in this conversation unless you have a clear picture of what you want. And we have tools and calculators for that at the Real Estate Wealth Lab. So don't worry, we've got you covered there if this is feeling a little bit overwhelming. But we're going to start, normally I would start with GDP. And I'm not really going to this time because GDP matters, economic activity matters, and I'm not going to go and rate the whole world or whatever. I mean, all that data is available, but I'm not going into GDP because so much of this is about back to these questions. GDP may not matter to you at this time. You may be looking to relocate from Canada because, and we've talked about, I'm going to be straight blunt here. We've talked a lot about the Emergencies Planning Acts in September, in October, in November, and how they potentially could, and then they were applied at the federal level in February, and how those could impact your property rights. And we've gotten legal counsel to give us information on that. So it is something to be mindful. And you might go, you know what, I just care about my property rights. And there's a different way that I want to live, and GDP doesn't really fit that. But there's all these other components and indicators and checklist components that I need to look at. So it's fairly broad, so that's why I'm not going into it. But of course, if we wanted to dive deeper, we absolutely and exactly, Vincent, the freezing of the bank accounts, which is why I thought it was so ironic that the federal budget had that whole claims, that whole independent, whatever it was, to for complaints against banks. Okay, sure. Tammy, for example, the UN signed document with Canada and Netherlands for digital passports to fly. See, all of these things, there's so many reasons. So obviously we can't get into all of them, but I wanted to give you a couple of places to start and some great questions. And then again, some potential solutions. So if you're looking at it from a currency perspective, this Statista has the global, this Big Mac index. I highly recommend going and checking it out. The whole thought process behind the Big Mac index is that, I mean, a Big Mac is pretty standardized. McDonald's food should taste the same around the world, and therefore it should be reflective of the purchasing power and of the currency. So there we are. That's kind of the thought process. And then consider where your money might go further. Buy more Big Macs, buy more houses. That's the concept. So now this is just the bottom end of the spectrum here. So in terms of how much it's cheaper to buy a Big Mac in Russia. Is it cheaper to buy a house? I don't know, but it's certainly a place to start. And actually, Russia, I've got some data. This is crazy. Russia, I am surprised, attracts a really high percentage of migrants. I will show you that very shortly. So as we get into population. So again, you want to look at the factors that you need to look at, but population is helpful to look at as well. It's a leading indicator. And what we are seeing is that there's actually, so this IOM UN Migration World Report just came out in April, and it's, again, really, really long, but there were some cool stats. So I tried to pull a few from it without overwhelming you. But what you can see in 2000 versus 2002, the estimated number of international migrants, like in 2002, that's massive. And I believe that there's incredibly pent up demand. People have been barely able to leave their houses for the last 2 years. So in terms of moving and relocating and things like that, there's a demand, and there's also all these other components that we were talking about of reasons why people might want to. So the estimated portion of the world population who are migrants is actually only 3.6%, but it's up significantly by percentage and by millions. And we're still not even really fully into into freedom, if you will. Like, there's still a lot of restrictions, and I'll show you that in a moment. I think it's going to be soon. So where are they coming from and where are they going to? Now, this is helpful. So you can see that the US, is a column on the left, is the highest locations of destinations where people go to. And then on the right is where people are coming from. Now, why that matters to you, it kind of maybe doesn't, except for the fact that if people are moving into a nation, that is a leading indicator of rents and real estate property values. So therefore, one could deduce that that's a possibility that their real estate could go up higher than others. That's a possibility. Another thing, and I think I've got it on another slide, so I'll just say it here, is another thing is that if people are moving at high numbers to these locations, they may be more likely to have the infrastructure in order to support processing you, theoretically, or they could be so backlogged that a visa takes 9.5 months to process. Just saying. And still not done. So, you know, those are other things that you need to take into consideration as well. So with the population, and I wanted to show this in terms of COVID-19 government restrictions with travel, because travel affects your ability to invest globally in some ways, not always. Like if you're doing it yourself, then yeah, you got to be there, or you've got to have a power team, or if you want to relocate for your global investing, that's different. If you want to do it and not do it yourself and have a private equity firm or a REIT, for example, Aurelio Baglioni's REIT at Vertis, his is in the US and Canada, so you can get in there and be diversified without having to leave your chair. And that's pretty cool too. So global investing does not have to be as complicated as this, which is a lot more do-it-yourself kind of version. So I just want to be really mindful of that. But at the peak, 185 countries imposed international travel bans right here. And that's pretty significant. And you can see that it's going down. In July 2021, 65 countries had internal travel bans. So, okay, there's still mobility problems. And it also reflects that pent-up demand. That's a lot of people who have not been able to really move as much as they have wanted to over the last little while. So then the population for these, sorry, I got distracted, Tammy. I was reading your question. So let me just read it. So also that can be a bonus and drawback with delayed infrastructure. Exactly. Depending on your goals, it really definitely depends on what you need. That's okay, Tammy. It's all good. I love it. This is interactive. So I appreciate it. So when it comes back to the population with these travel restrictions, again, where can you go? So look at the gray. I actually went mapping. I was like, no measures, what is that? And I started going and trying to find these little guys on the map, and I was surprised by a couple of them. It was very interesting. So where can you go? And this is, again, it's useful when you're considering do-it-yourself global investing and those reasons. And again, changes, these could have changed since then. Changes in the rules are always happening, so we just got to be mindful of that. And various, Anita, do I see Costa Rica with no measures? No, Anita, you don't. You do not. I know. Haha. And in fact, I've been doing some research on some Central and South American locations, more specifically. Yeah, so Central and South America. I've done a little bit of research on Europe. I'm getting ahead of myself, but a little bit of research on Europe, and of course in the US, a ton of research. And I'm getting quite excited about all the possibilities, and where I thought might be amazing is a little bit less so, depending again on what you want out of it. But Costa Rica is definitely on the list. So when we look at this, I love this table. So this shows the share of international migrants, within each country. So as you can see now, if you think about this, if they have a lot of migrants in their country already, then they might have, again, more of that infrastructure to support. It might be backlogged, as we talked about. It might be easier to navigate. It may be more open and amenable to foreigners. But on the flip side, you know, there's a lot of countries that are really open that don't have a lot of foreigners at all in their mix. Again, look at the gray areas with the very light blue areas that don't have a high percentage of migrants, but who need and want the income, the money and the economic activity that would now create. And so they may be offering incentives, which many countries actually are right now, to help bring individuals in. And Catherine is saying that Mexico is fairly easy. Excellent. Wonderful. Thank you, Catherine. And that's on my list too. I'm giving them all away. International real estate investing team. So let's get into it. From a team, this is again more from that yourself, but even as a don't do it yourself, like if you're going through a REIT or a real estate private equity firm, they're going to have the right infrastructure. And if they don't, then run away to support you in determining your tax accountants and things like that. You don't have so much to worry about with regards to attorneys so much, unless you're setting up a trust or whatever. But as it comes to global investing, tax accountants, you need one in your home country. You need a cross-border, and you need a local, like local in whatever cities, and I say cities or counties or regions that your property is in, or your assets or whatever have you, you absolutely must have a local one. And then they need to all talk together. Thank gosh for Zoom. I just renewed my account. Attorneys. So you need tax, corporate, real estate, estate planning, again, depending on what you want. But I just want to rewind a little bit to tax attorneys. Who here has heard of a tax attorney? Yeah, okay, good. Lots of people. See, you're all sophisticated. And we've got, it's fantastic. So tax attorneys, they do look at things very differently. And so if you are looking to relocate, then you definitely need one of those. So very, as opposed to if you're just looking to invest, you know, outside of Canada or whatever, or outside of the US, you may not need a full tax attorney, but you'll need some definite like corporate planning and trust and things like that. So property management, flexible, international, do it yourself. So for example, like if you're going to do a property management on your global real estate investing, how are you going to do it? I can tell you, I've tried setting up some systems and they did really, really well, but I brought in, unfortunately, a team that just didn't quite cut it. And it made things really challenging. And for those of you who have not heard about Tenant Cube yet, you must come out to our next Market Leaders and Community Lab, because Tenant Cube offers a crazy product that's going to super be helpful for this kind of flexible, international, do-it-yourself, inexpensive property management and support. And then if you don't want to do it yourself, then they're going to have like local and whatnot, so you won't have to worry about that. Financing, traditional, private, cash, should have added that. There's some locations that only cash. What is that going to look like? And your realtors, again, there's a lot more on this investing team, but this is going to get you started. And basically having other like-minded investors, such as this group and this community, who are interested in learning more and actually taking action on global investing. So real estate ownership, can private land be owned by a foreigner? Oh my. What questions to ask? Are there communal lands that are actually tax attorney? Yeah, Anita, I've got a recommendation for a tax attorney. I have not. Yeah. Anyway, I can get that to you afterwards. And that actually, I love that you asked that, Anita, because this is something that I'd love, and I'm going to propose to us that I'd love for all of you here to come to the Community Lab June 15th. Because at that community lab, we're going to be designing how the community lab operates. We talked earlier about masterminds at REWL, or breakouts that are really intended for individuals. And so what I'd like for us to do is come together as a group, as a community, and design how we want our community to interact, how we want to best learn from each other, support each other, and whatnot. And so, Anita, so your question, for example, of a good tax attorney, maybe there's a breakout room or a special mastermind or a special group that's like focused on global investing and relocating, or global investing and not relocating, and sharing resources and supporting one another. So thank you for asking that. Communal lands, special status or class, like there's certain lands that you can't access, that you need to know about, or that have privileged information, if you will. You got to know if you can own it in your personal name. Can you own it in a corporation? If so, what kind of structure serves best in that country and for you, given what you're wanting to accomplish? I know there's a lot of questions, but all of these questions can be answered with getting the right community, the right support, and the right team in place. And a lot of this is personal. Oh, sorry, I said that, personal ownership. And it really depends on the country. And you may even want to consider co-living arrangements or co-ownership and spending some time here, especially, we'll get into that in a minute, but especially if residency requirements are, 3 months here or 6 months there, and then you're doing co-ownership swapping, that's a possibility that's more of a nomad lifestyle, if you will. But certainly possible. Oh, the fun stuff, looking at banking and resources. I know this is crazy, but can you access a bank? And what banks can you access? Once you start getting into it, like the funny things that you uncover are just, that I've uncovered, I should say, I'll own this, that I've uncovered in my little journey is just incredible. And so things that you would take for granted can often just not exist. Like accessing banks. And which banks do we trust, Tammy? That's an excellent, excellent question. How to open up an account? Can you do it do you have to do it in person? If so, how do you get there? Are there other ways to open an account online? What's the opening balance amount? What's that needed? Can you do funds transfers, and what are their wire costs? Or are you going to be using wires? Wire costs can get really, really, really expensive. So you need to keep that in mind. What about fees? And how much fees? And do you need to link accounts? Can they connect with Canadian accounts? And I'm actually just going to stop right here for a second. In the US, for example, and actually in other locations around the world. So for example, Scotiabank, it used to be Nova Scotia Bank, but it's Scotiabank in Canada. So they're all over the world. And in the end, but they're not the Canadian Scotiabank. So they're kind of affiliated, but they're actually a different organization. Same with RBC, same with TD. So if you're doing, and just want to be mindful, like let's say you're an RBC client in Canada, cool. You've been that way for forever. You've got a client card, blah, 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 good relationship, manager, bank manager. It's a different entity entirely in the US so that it doesn't go back and forth. So there's some benefits for sure, sticking within the family, because they can share that they know you or whatever have you, but it's not quite as seamless as one might think. And you may need to show evidence. No, there's no may. You need to show evidence of source of funds. So be prepared for some paperwork if this is something that you're looking to accomplish with global investing. Can you withdraw the money? How much? How much at a time? You may need to have also letters from so it's one thing to have a letter from your accountant to show your personal or to show your funds, but then it's evidence of source of funds. And also just consider, what does cryptocurrency look like for you in your life? I don't know. I'm just putting it in there because lots of people are finding it beneficial when they're considering global investing. So you want to research when it comes to financing, that's completely separate. You're going to want to research all of your options, your name brands that as I was mentioning, TD, RBC, et cetera, their operations do differ. So some won't work and some will. And a few of them work really, really great. Andres, could we have the money on tax haven country like Panama? What do you mean by have the money on? Could you have the money in a tax? That would work. Would that work? Well, let me talk about tax havens. They are tax havens. It's just like stereotypes. The word stereotype. It means that there's patterns. It's actually, stereotype simply means that there's a repetitive pattern. And really, when people say, don't stereotype me, well, it's because there's a pattern of behavior that typically is associated with a particular group of individuals or group or organization or country. That's what I was getting at with this, is that those tax havens can work remarkably, but you definitely need to have the right information. And bear with me, ladies and gentlemen, I know and appreciate I'm coming up 15 minutes over my allotted time here. I'm almost done. So I'm going to bang through this. What you need to know is that there's a lot of questions to ask, and this is all going to be in your member portal. If your taxes, if you're leaving for good, will, probates, property taxes, capital gains in both countries, in your origin and your destination. Health insurance, all the really important things, hey? And not just health insurance, but other insurances. Here's a couple of examples of companies that offer health insurance. But also, if you go to a place and you're technically considered a permanent resident, which you might be able to qualify for through your real estate purchase, you may actually have free medical care. Think about that. So you might not even need it. A lot of information to go through. You'll want to have your passports renewed because if they expire while you're away, oh my, both Canada and the US renew for 10 years. Same with driver's licenses, renew before you leave. Typically Canada, 5 years, I think, and US, it really varies by state from 2 to 12 years. So you'll definitely check that. And some of them you can get in other locations. You can get local or international driver's licenses. Residency permits, holy cow. How do you qualify for them? What are the options? What are available by city, by country, pardon me. There's everything from being an investor, investing in real estate, some low as $50,000 US. And that will get you permanent residence, even up to citizenship in some cases. Lineage, you may be already looking at that. Where you come from can help you get into someplace else. You may have to get, can you get a working permit, etc. Then all the other questions on how long, can you leave, can you return, what are the restrictions, and can you change into citizenship if that's something that you want to. And also importing assets. If you're relocating, what do you need? Can you bring in cash, precious metals? What about your car, personal items, pets? I don't know, but all these things have to be asked and looked at if that's one of the ways that you're looking at global real estate investing, whether it's relocating or even lifestyle, because you'll need to go, let's say you're going for three months to 6 months. What cash can you bring with you? How do you access it? So it's planning ahead for all of those. Some resources, Nomad Capitalist, International Living, and Bank on Yourself. These are very helpful. Oh, yes, that's cool. Who's this? I can't see. I had a friend who moved to Spain from Canada. What he saved. Oh, this is Dad. Hi, Dad. Couldn't even see that. He saved on taxes, bought a big house overlooking the Mediterranean with a marvelous swimming pool. What a windfall. Funny you should mention Spain. Huh, I didn't even know that I was looking at that. So here are my top picks. My top picks for some of these locations, depending on what you were looking for, again, because it varies, but South Central American countries, I'm not going to give them all. You're going to have to come out to future REWL events so that we can go through these and unpack them. But my number 2 is Costa Rica. That means there's a number 1 in the US, just by states. Florida is number 1. And there are definitely others. There's lots in the US. And in Europe, actually, number 1 at the moment, Portugal. And that Mediterranean house there was also on the list too. Spain is also on my Europe list for great places to do global real estate investing. Again, depends on what you're looking for. So your next steps. I know there's a lot of information and I hope you can appreciate that it's very personal and it really depends on your pathway. So let's identify, and we have all the calculators that you need actually to identify where you are today, where you want to go, and then how to get there with the Real Estate Wealth Lab. So some of your next steps is to join our community lab on June 15th. We're going to be designing breakouts, connections based on your feedback, and build your network of like-minded investors. And then some of you I know already are interested in co-ownership and vacation rentals and franchise options as a way for you to access different visas and different things as well to get in and out of various countries, including the US as well as others. So in other words, there's a lot of resources in this community that I know who are also working on these things. Anita, Allison, Tammy, I shouldn't name all of you and I won't, but I know, and we're going to work together, collaborate and figure this out so that we can have a global investing empire. So let's connect, stick with us, and oh, there it is. And in the conclusion, ladies and gentlemen, for all of today, what it means for you is to diversify. So if I was you, I would diversify my portfolio. I'm actively diversifying my portfolio, even beyond Canada and the US for sure. These are all in. Home prices have nowhere to go but up. On top of supply and demand issues, inflation and other indicators, they're all poised to put more pressure on real estate. And this is generally speaking around the world because the population of the world is growing. I know that's an overgeneralization, but if I were to be a betting woman, I would say my conclusions are buy and hold basically almost anywhere when applying appropriate due diligence. And Danielle, love it. Can I start now? Yes, let's do it. 100%. So buy, hold. And again, your final thoughts is that we're in turbulent times. We're in inflationary times. We are in an optimal time to diversify our portfolios globally and internationally. We've got double buy signals and you're in the right place. So thank you again for being with us. And please join us for all of our next live events in the coming weeks. Niran's already told you to get a snapshot of this. Become a REWL ambassador. And thank you very much. And Niran, I don't know if you have anything else you'd like to add, but I know we've been a little bit over. Sorry, guys.
Sure, I'm trying to do something here. Add spotlight there. I think you should be able to see me. Is that right?
Yes.
Very good. Jennifer, thank you for all this. And before we all go our separate ways, there's something that was just, again, spinning around the back of my mind. When all this information is thrown at us, there's this feeling of, whoa, that's a lot. And then we leave from here. But I would really encourage you to stop for even 5 minutes at the end of today and ask yourself, what are top 3 things that I can actually execute on right away? And start creating that action plan in place. Because here's what will happen. Otherwise, you will go from here and it'll be a great event. You will think about it, but it won't actually change your future. And to change your future, you either have to go out and do it yourself or don't do it yourself. Partner up. One of the two, right? You can't, all the things that are coming down, that's happening the next few years. Jennifer, you were talking about possibly, a reduction, softening in 2023, possibly all these things that are happening. We're not going to be able to run from it and hide from it. It is happening. If we live in Canada, it is happening. What we can do is minimize what is possible of its effect on us. And I think one of the ways that that you kind of do it is that we increase the reservoir or capacity that we have for actionable intelligence, for the right relationships, for the right contacts. And so if you're feeling stuck at the end of today, if you're feeling stuck, give Paige give a wave. She's our customer experience. She keeps us all in line and makes us look good.
I'll add a spotlight to you, Paige.
So, Paige, I think that if you're feeling overwhelmed or just feeling stuck, book a call with one of our advisors. We're really good at what we do. And we're in it, we're doing it at the same time. So we can probably help you get moving to your next step.
And 100%, you are not alone. And with your membership, that's a very good point. That includes a consultation with an advisor. So pick up the phone or email Paige. She'll get you to the right advisor depending on what your needs are. We'll get you set on the right path, and we've got the right community to just take some of the, I love that you said get into action, and your action doesn't need to be very, very crazy or big or overwhelming. Your first step is actually to make it easier for you. Yeah. Awesome.
Well, one of the questions I've constantly asked myself this week is, what would this look like if it was easy? Because otherwise we tend to complicate ourselves. And so yes, we're here to help.
I like that.
So anyway, thank you all. Have a great night. Jennifer, closing words from you or from Paige.
Well, thank you everyone for being here. So delighted, so blessed, and grateful for each and every one of you. And thank you, Niran, for being an amazing co-host. Niran's not feeling well today, everyone. So give him an extra round of applause. You'd never even know it, hey? Total professional. And I miss you all. And let's go hang out where there's palm trees and invest in real estate there. Sounds good. Okay. Sounds like a deal. I'll see you May 11th. And get in touch with us in the interim. Thank you. Bye, Dad. Bye, Anita.
Hi,
Bye,
Jennifer's dad.
Catherine. Hey. Oh, yeah.